to OptionsTender. We are going to have just a special video for those out there that are a little bit of curiosity of what market breadth is, if you want something to trade by it, if you're a day trader, or if you're just looking to position and you want to see what's happening with the market in the very near term. I have a few things for you and I just want to show you to do. We're going to just take the easy definitions of them and go from there. So, before we go through that, go down to the OptionsTender logo, hit the subscribe button, and you can join us in a free Discord. It's the Option Guys. I'm going to put that down in the description, and just go ahead and click on that and join us. We have trade ideas every day, discussions, have a good time. So I'm going to give a little bit of update on the market here while almost to lunchtime. We this week we had a dip down, a 5-wave move for wave 4, and it now looks like our complex correction, which is typical for wave 4, is going to be a sideways triangle. We may today we're giving back all those losses we had from the news yesterday. Some news about taxes or capital gains, I believe, but. So we're still in the triangle, so we're still considered sideways. As soon as we start breaking out of this range, then we can consider this correction over. As of now, we have an A, B, C. It really could be over now. Maybe this is the correction here, A, B, C, and this is a 1, 2, and working on wave 3. So there's just a couple things that could be happening. And, you know, the market could do anything, you guys. If we start to fail this triangle, we break this point, we're still able to be in some sort of ABC down. It doesn't look likely at this point, but let's just keep an eye on this, this level here. I'll fix that up a little bit. Okay. And then we can get a count to the upside. Hopefully we'll have a 5-wave move to the upside after that. Okay, so what's on my screen? What do I look at? As soon as the market opens and then throughout the trading day, this is what I'll take a look at. We have TRIN, $, TRIN. What that is a market breadth. It's of the NYSE. What it does is it takes the advanced decline and the volume. That's the key. The advancing volume and the declining volume. They have a formula. Anything under 1 is a bullish indicator. Today to 0.76, you'll see that fluctuate. That's bullish. It's right in the sweet spot. Anything under 0.5 is a contrarian indicator of that something is going to be bearish. It doesn't say that in the definition, but some contrarians actually use that when it's very low to 0.5, that's headed towards the bearish area. But just think, under 1, bullish, over 1, bearish. And now when you get into the 1.5, that's a contrarian, bearish, bullish indicator. So just keep under 1, bullish, over 1, bearish. On the tick is sort of the same, but it does not include volume. So with the tick, anything positive is bullish, all the way up to 1,000, and then same thing, opposite is bearish when it's negative down to 1,000. Now I actually have my screen set up, so I have the ticks on the comparison bar down low on the right hand side on my 5-minute chart. This is the day so far. Ticks came out raging out of the door. I think it goes up to 1,200, and then is starting to wane just a little bit as price continues to grind to the upside. Now, this isn't part of it, but these turquoise lines, that was yesterday's price range, and then without overnight action, and this is today's. So that's how I look at my screen. And then I have volume set up here as well. So this is my day trading tool. And then I like to keep track of the hourly bars here on the left side with my MACD, RSI, and slow stoke. So a lot of indicators going on there. To get back to breadth, I also have the NYSE advanced decline, and just another indicator. It's I skipped over the advanced decline of the S&P 500. So this one is real simple. 500 stocks in the S&P, right? It's 500 advancing minus however many are declining. So we have 359 advancing. We're bullish. So once we start to get into the negative, that would be bearish. Simple as that. And anything over 300, we are extremely bullish. And this one is pinned. We call that pinned when it's 300 all day long. The price action is just headed to the upside. It's a trend day. It's usually an indicator of a trend day. Opposite of that would be the negative 300. That'd be a trend day down. Now, these indicators can come out raging in the 300s, 360s. And then if you start to see them crack into the 200s and then 100 down into the negative, you know the internals are bleeding out. So you just have to keep an eye on this. It's a really good indicator to look at for the first half an hour of the day, 15 minutes at least. Now, I do keep the SPX there, and then we keep a track of volatility. Volatility is being crushed, so that's another indicator that the bulls are back in town. Now, here's the nuance. When these are, for example, raging bullish like they are today, but prices going down, there's something wrong. So that's why I keep the NQ and RTY, the small caps, here as well. For other reasons also, but you might have the NQ diverging to the downside. I mean, you see those rotations have been massive. So if we have the NQ actually negative, but the RTY up 3%, you know, it might be just that those large $1 trillion caps that are pulling down the market overall. So it's going to give you Twitter's going in there. So it's going to bring you underneath, it's going to pull down the whole market while the internals actually look good. So if something's wrong with your movement isn't going with the internals here, it's because you have to look further. So you can look into other areas and see that I have the monsters attack down here. We have the big tech, FANG, and Tesla checking out down here. And so I do have a indicator I got from Theo Trade. I can't give that out, but that gives all of these put together, and they call them the monsters attack. So that's pretty much it, you guys. Those are the internals. That gives us clues on what the market is going to do for today. If everything's rotating and mashed up for the internals and they're all neutral, we might have a sloppy day in hand, and I wouldn't expect too much of directional play, just kind of choppy up and down. But that gives you a good indication of what's happening. There's one more I might as well show you in this video. I don't want to keep it too long, under 10 minutes. So we do have the market watch if you're using Thinkorswim, and I like to go over to the go over to the index, select the S&P 100, because all the other stocks really don't matter. If you have the S&P 100 moving in one direction, it's usually taking the whole market with it. So this is a good indication. This is all 100 stocks in the S&P 100. You got one down here, bad or good earnings, but they went down on good earnings with Intel. So, but you see all the other stocks are advancing. So this is a 85 to 16. Yes, there are 101 in the S&P 100. That's because Google has two tickers, Goog and Google. We have it's 85 to 16. So you see that's a trend day up. You have most stocks advancing, and that could be a good indicator you'd use in the morning as well. I look at this every so often also. So that's it, you guys. That's our market internals in a nutshell, the basic, and let's see if we break out of this point here to the upside. If we do that, we are back bullish, baby. This could be just another move to the upside and then head back down to the bottom side. So just watch out. Take your profits here. I did not. I didn't take my profits. I actually made a bad move right here myself, so we didn't know that it was going to be a triangle. But all right, thanks for joining us here at OptionsTender. I hope you enjoyed this information. Let me know if it helps. Like the video if it does, and hit notifications. We do these videos all the time. All right.